welcome back to Dukascopy TV and the week's middle edition of Targets in Focus. Joining me down the line to discuss this sterling story is Paul Robson, Senior FX Strategist with RBS. Paul, Thursday sees the Bank of England meeting. Carney chose not to use his first high-profile speech to talk down market interest rates, which signalled to the markets that a rise in rates isn't yet seen as unwarranted by the central bank. On the same day, while ECB inaction is expected, President Draghi will be choosing his words carefully. With this in mind, what is your outlook for the sterling in general and then against some of its major counterparts?
Well, we think that sterling is a tactical buy at these levels. On a more strategic perspective, we do recommend selling sterling against the dollar. We just think that it's hard to deny the improvement in UK data that we've seen over the last couple of months, broad-based improvement, yes, mainly survey data, and we still have to wait for the official data. But as you say, it will, against that backdrop, be very hard for Carney to sound too dovish, if you like, in a statement, if in fact we get a statement. So if we get a statement, I think there's plenty of people on the MPC who will take a more cautious approach to the interest rate outlook. We know that from the last set of minutes when some members of the committee thought that the market pricing of interest rates was warranted. It was just that Carney thought they weren't unwarranted. And if we don't get a statement, I think that the market will take that as that there's quite a lot of disagreement on the MPC. So either we get a statement that is slightly hawkish relative to recent past, or we don't get a statement and the people just interpret that as being a slightly change in tone, if you like, in monetary policy terms, from the Bank of England. And against that backdrop, I think yields continue to drift higher and yields remain a good predictor of where exchange rates go. Now, against the dollar, that will be very much down to what we get on Friday on the non-farm payroll report. If we get a very good number, something above 200, for example, I think that you'll see interest rates, market interest rates, rise more quickly in the US than they have done in the UK. So maybe cable stays flat or goes down a little bit. But I think it's euro sterling where the opportunities lie to buy sterling from a tactical position. I think the data, while improving in Europe, is still lagging the UK. And I think the ECB will take a very cautious tone. And the press conference, Draghi can easily sort of tone down the market rhetoric, if you like, in terms of pricing in rate increases. So on balance, short-term euro sterling lower, potential for cable to go lower, but only if we get a good employment report later on in the week. If we don't, then I think you'll also see sterling a little bit high against the dollar as well.
Taking a slightly different tact, the AUD CAD seems an interesting pair, with Australian elections this weekend and Canadian monetary policy statement today. The CAD showed resilience against recent currency outflows in neighbouring countries, but what is your outlook for this pair moving forward? Well,
we think that the Australian dollar has been sold quite heavily over the last couple of months for good reason. Interest rates have been drifting lower. Data in Asia have been weaker. Australia is a proxy for what goes on in China, and the data in China up until very recently was very poor. But that means that positioning has become quite stretched, short positioning, extended, and I think people have already priced that in, that sort of more negative outlook for the Australian economy over the short term. Now, if we had something a little bit more durable in China, for example, and the recovery that we're seeing in the data didn't persist, then maybe we do get another leg lower in the Aussie dollar. But I think just the improvement we're seeing in Asia data, most notably the Chinese PMIs we've had this week, but also the global pickup in survey data this week. We've just spoken about the sort of UK very good numbers there, but in Europe, pretty good too, and also in the States. And I think that just means that we'll probably get a little bit of bottom fishing in Aussie dollar. People maybe taking back some of their short positions, given that the outlook has improved a little bit. Canada's a little bit different. It's held up remarkably well when other commodity currencies sold off, when people started worrying about higher interest rates in the US, or certainly higher market interest rates. And we think that the Canadian dollar is probably a little bit more vulnerable to one, just outflows of capital, safe haven flows that it enjoyed over the last couple of years come out because higher real rates of interest in the States makes it a little bit more attractive. Or the market sells off again, risk reversion. The Australian dollar comes off a little bit, but maybe there's a bigger opportunity for the Canadian dollar to play catch-up because it was largely untouched the last time around. In terms of interest rate policy, over the longer term, I think Canada does probably better than Australia, given its reliance to the US. And if the US continues to maintain its recovery, maybe the Canadian dollar does a little bit better against the Australian dollar. But certainly from a short-term perspective, a tactical week-to-week trade, we favour Aussie over the Canadian dollar.
Paul, thank you so much for your time and perspectives today. Well, viewers, that's all from me for the moment, but I'll be back tomorrow with the latest economic update on the Canadian economy. So please do keep clicking back to the website. Goodbye for now.